Dear students, in today's class you are going to learn something about accounting for share capital. Before going to explain what is share capital and who collect the share capital and how the share capital is collected, uh, it is necessary to understand the different forms of business organizations. I am going to explain it in brief. Okay, there are so many business organizations which we come across. In that, number one is the sole proprietary form of business. What is sole proprietary? As the name itself indicates, sole means single, proprietary means ownership. Sole proprietary means the business which is run by a single person, single owner, is called as sole proprietary form of business organizations. Suppose Mr. X, he is a person, he has got rupees 5 lakh and he wants to start a business. He can do so by investing rupees 5 lakh and he will become the owner of that business. Mr. X is called as a sole proprietor because he is the single owner. He is going to manage the business. Therefore, I can say that here Mr. X is going to invest the entire amount of capital and all the decisions of his business are taken by himself. And next one is whatever the profit he earns, that profit will be enjoyed by Mr. X. And if there is a loss, and Mr. X is going to bear such type of loss. That is why here Mr. X works as a manager, administrator, organizer of his business. Because of that reason, here Mr. X enjoys all the rights of his business. But simple thing is, this business is formed very easily. Much complications are not there. If the amount of capital is there, then that person can start the business. Here, legal formalities are not involved. Therefore, here this type of business organizations or this type of business comes into existence very easily. The formation of this type of business is very, very easy. But this business, the sole proprietary form of business, suffers from so many drawbacks. ನೋಡಿ ಇಲ್ಲಿ ಎಕ್ಸ್ ಯಾರು ಇಲ್ಲಿ ಒಬ್ಬ ವ್ಯಕ್ತಿ ಇದ್ದಾನೆ, ಇವನಲ್ಲಿ ಒಂದು 50 ಲಕ್ಷ ರೂಪಾಯಿ ಇದೆ, ಇವನು ಒಂದು ಬಿಸ್ನೆಸ್ ಮಾಡ್ಬೇಕಂತ ಪ್ಲಾನ್ ಮಾಡ್ತಾ ಇದ್ದಾನೆ. ಅವನು ಒಂದು ಬಿಸ್ನೆಸ್ ಸ್ಟಾರ್ಟ್ ಮಾಡಿಬಿಟ್ರೆ ಇಲ್ಲಿ ಎಕ್ಸನ್ಗೆ ನಾವ್ ಏನಂತ ಕರಿತೀವಿ, ಸೋಲ್ ಪ್ರೊಪ್ರೈಟರ್ ಅಂತ ಕರಿತೀವಿ. ಸೋಲ್ ಪ್ರೊಪ್ರೈಟರ್ ಅಂತ ಹೇಳಿದ್ರೆ ಏಕ ಮಾಲೀಕತ್ವ. ಇಲ್ಲಿ ಎಕ್ಸ್ ಏನಾಗುತ್ತಾನೆ, ತನ್ನ ವ್ಯವಹಾರದ ಮಾಲೀಕ ಆಗ್ತಾನೆ. ಆ ದುಡ್ಡನ್ನು ಯಾರು ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಮಾಡ್ತಾ ಇದ್ದಾರೆ, ಎಕ್ಸ್ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಮಾಡ್ತಾ ಇದ್ದಾನೆ. ಇಂತಹ ವ್ಯವಹಾರಕ್ಕೆ ನಾವ್ ಏನಂತ ಕರಿತೀವಿ, ಸೋಲ್ ಪ್ರೊಪ್ರೈಟರಿ ಫಾರ್ಮ್ ಆಫ್ ಬಿಸ್ನೆಸ್ ಅಂತ ಕರಿತೀವಿ. ಆದ್ರೆ ಇಲ್ಲಿ ಸೋಲ್ ಪ್ರೊಪ್ರೈಟರಿ ಫಾರ್ಮ್ ಆಫ್ ಬಿಸ್ನೆಸ್ ನಲ್ಲಿ ತುಂಬಾ ಅನಾನುಕೂಲತೆಗಳು ಇದ್ದಾವೆ. ಆ ಅನಾನುಕೂಲತೆಗಳನ್ನ ನಾನು ಇಲ್ಲಿ ಮಾಡ್ತಾ ಇದ್ದೇನೆ, ಎಕ್ಸ್ಪ್ಲೇನ್ ಮಾಡ್ತೇನೆ. ಓಕೆ, ಫಸ್ಟ್ ಅನಾನುಕೂಲತೆ ಯಾವ್ದಿದೆ? ಓಕೆ, ವಾಟ್ ಈಸ್ ದ ಮೇನ್ ಡ್ರಾಬ್ಯಾಕ್? ಫಸ್ಟ್ ಒನ್ ಈಸ್ ದ ಲಿಮಿಟೆಡ್ ಕ್ಯಾಪಿಟಲ್. Here the capital of the business depends on the financial position of Mr. X, the sole proprietor. That is why if huge amount of capital is required to expand the business or to introduce the latest technology, it is not possible because Mr. X may not have that much of amount. That is why here a limited capital is one of the drawbacks of a sole proprietary form of business. Next drawback is the continuity of the business is not guaranteed, because the business will not continue for a long period of time. Why? Because here Mr. X is the owner. If he dies, business comes to an end. If he becomes mad or if he becomes insane, due to his insanity, business may come to an end. If there is a heavy loss, what happens? Here business properties may not be sufficient to discharge the outside liabilities. Assume that the businessman Mr. X has taken the loan from the bank, or he has purchased the required materials or goods, machineries on credit from outsiders. In case of loss, it is very difficult on his part to pay the amount. Therefore, if the liability is more than his assets, in that case, discharging the outside liabilities becomes very difficult. That is why in that case, what happens, his personal properties are taken into consideration for discharging the outside liabilities. Okay, next form of business organization is a partnership form. First one is sole proprietary form of business you studied. Next one is partnership form of business. Partnership form of business. Partnership. What is partnership? Here, partnership business refers to a business which is run by minimum 2 persons who have attained the age of majority, and maximum limit is also there for the membership. Here partnership business comes into existence by an agreement. This you have to remember. One thing you remember here, the maximum number of members is fixed even in case of partnership. Even in case of partnership firm, we can say that it suffers from some drawbacks. What are the drawbacks? Here also limited capital will be there, because assume that partners, if they want to establish a large scale industry where a huge amount of capital is required, it is not possible on the part of the members to invest that much of capital. That is why limited capital is one of the drawbacks. ಪಾಲುಗಾರಿಕೆ ಸಂಸ್ಥೆಯಲ್ಲಿಯೂ ಸಹ ಪಾಲುಗಾರ ಇರ್ತಾರೆ, ಮಿನಿಮಮ್ ಇಬ್ರು ಪಾಲುಗಾರ ಇರ್ತಾರೆ, ಆಮೇಲೆ ಮ್ಯಾಕ್ಸಿಮಮ್ 50 ಅಥವಾ 100 ಇರ್ತಾರೆ. ಇಲ್ಲಿ ಒಂದು ಮ್ಯಾಕ್ಸಿಮಮ್ ಒಂದು ಗರಿಷ್ಠ ಮಿತಿ ಇದೆ ಸದಸ್ಯರಿಗೆ. ಅದಕ್ಕಾಗಿ ಇಲ್ಲಿ ಹೆಚ್ಚಿನ ಬಂಡವಾಳವನ್ನ ಕಲೆಕ್ಟ್ ಮಾಡ್ಲಿಕ್ಕೆ ಇಲ್ಲಿ ಪಾಲುಗಾರಿಕೆ ಸಂಸ್ಥೆಯಲ್ಲಿಯೂ ಸಾಧ್ಯ ಆಗೋದಿಲ್ಲ. ಅದಕ್ಕಾಗಿ ಇದು ಒಂದು ಅನಾನುಕೂಲತೆ ಅಂತ ನಾವು ಹೇಳ್ಬೋದು. ನೆಕ್ಸ್ಟ್ ಡ್ರಾಬ್ಯಾಕ್ ಆಫ್ ಪಾರ್ಟ್ನರ್ಶಿಪ್ ಫಾರ್ಮ್ ಈಸ್ unlimited liability. What is the meaning of unlimited liability? Just I explained in case of sole proprietary form of business. If the business assets are not sufficient to discharge the business liabilities in full. Try to understand here. If the business assets are not sufficient, or if the business assets are less than the business liabilities, in that case, what happens? The personal properties belonging to the partners will be taken into consideration. Here it is the responsibility of the partners to discharge the outside liabilities. You can understand this one better if I take an example. Assume the partnership firm has got the assets worth rupees 10 lakh. Assets are there. Next one is liabilities of the partnership firm are there rupees 15 lakh. See, when 10 lakh assets are there, it is very difficult to discharge the liability of rupees 15 lakhs. In this case, 5 lakh, extra amount is required to discharge the outside liabilities in full. In this case, what happens? This rupees 5 lakh, which is not recovered even after discharging the business assets, will be recovered from the personal properties belonging to the partners. This is called as unlimited liability. ಅನ್ಲಿಮಿಟೆಡ್ ಲೈಬಿಲಿಟಿ ಅಂತ ಹೇಳಿದ್ರೆ ಅಪರಿಮಿತ ಹೊಣೆಗಾರಿಕೆ ಅಂತ ನಾವು ಕರಿತೀವಿ. ಅಪರಿಮಿತ ಹೊಣೆಗಾರಿಕೆ ಅಂತ ಹೇಳಿದ್ರೆ ಇಲ್ಲಿ ಪಾಲುಗಾರರು ತಮ್ಮ ಆಸ್ತಿಗಳನ್ನ ಮಾರಾಟ ಮಾಡಿದ ನಂತರನೂ ಸಹ ಏನು ಅವರು ಲೋನ್ ಅಥವಾ ಲೈಬಿಲಿಟೀಸ್ ತಮ್ಮ ಹೊಣೆಗಾರಿಕೆ ಬಿಸಿನೆಸ್ ಹೊಣೆಗಾರಿಕೆಯನ್ನ ಸಂಪೂರ್ಣವಾಗಿ ಸಂದಾಯ ಮಾಡ್ಲಿಕ್ಕೆ ಆಗ್ಲಿಲ್ಲ ಅಂತ ಹೇಳಿದ್ರೆ ಬೇಕಾದಂತಹ ದುಡ್ಡನ್ನ ಅವರು ತಮ್ಮ ವೈಯಕ್ತಿಕ ಆಸ್ತಿಗಳಿಂದ ಕೊಡಬೇಕಾಗ್ತದೆ. ಅದಕ್ಕಾಗಿ ಇದಕ್ಕೆ ನಾವೇನು ಹೇಳ್ತೀವಿ? ಅಪರಿಮಿತ ಹೊಣೆಗಾರಿಕೆ ಅಂತ ಕರಿತೀವಿ. ಇಫ್ ದ business assets are not sufficient to discharge the outside liabilities of the business in full, in that case, the amount will be collected from the private assets of the partners. This is called as unlimited liability. See, even in case of partnership, the business continuity is not guaranteed, because as per the Partnership Act of 1932, a business comes to an end when a partner dies, when a partner retires, when a partner becomes insane, or when a partner becomes insolvent. These are the different situations under which the partnership business is going to close. That is why here, in case if the remaining partners are willing to continue the business, they can do so by forming a new agreement. Next one is, come to the next important what you call the form of business organization is company form of business organization, which is pertaining to our accounting for share capital, this topic. Okay, what is company? Here company is nothing but an association of persons which is formed by following the rules and regulations which have been mentioned in the Companies Act of 2013. When a company comes into existence, when a company is formed, here for the formation of the company, minimum number of members is 7 in case of public company. But here maximum is unlimited. Here one thing you remember, the maximum number of members is not fixed by the Companies Act of 2013. That is why here whatever the capital is required to run the business can be easily collected from the public. Therefore, here company refers to an association of persons, and company is also called as artificial person, artificial person. It is created by law, having its common seal and perpetual succession. Try to understand these important terms. Perpetual succession. And here I write one more important point, that is limited liability. Limited liability. Okay, fine. What is the meaning of company here? Company is an association of persons created by law as per the rules and regulations which have been mentioned in the Companies Act of 2013. A company is required to get registered its name. Therefore, only after the registration or incorporation, a company comes into existence. Next one is, this company is called as an artificial person. What is the meaning of artificial person here? See, we are the natural persons. We can enter into contract or we can enter into agreement with other persons, outsiders, if we are running a business. But here, company being an artificial person. Why? Because it is created by law. It is not a natural person. That is why here company can enter into agreements or contracts with the third parties. Here, company therefore is called as an artificial person. See, we being the natural persons can enter into agreements or contracts with outsiders. But here company, as per the Companies Act of 2013, can also enter into agreement or contracts with third persons. It can act as a person, but not a natural person, but as an artificial person. Therefore, here this artificial person also needs to put the signature. We being natural persons, what we do, we put the signature, but here company can't put its signature. Therefore, here company's seal is very important. Common seal will be there. Therefore, company's seal is required to be affixed on each and every document of the company. Then only such document is called as a valid document. Next one is, it is created by law. Next one is, it has got a perpetual succession. What is the meaning of perpetual succession? A long life. See, in case of sole proprietary form of business and partnership form of business, the continuity of the business is not guaranteed. I told you, when that particular proprietor dies or becomes insane, in that case business or insolvent, business comes to an end. But here in case of company, if any member dies, if any member becomes insolvent, if any member becomes mad, under such circumstances, company is not going to close. That is why, as per the Companies Act of 2013, the business of the company will be continued irrespective of the death, lunacy, retirement, or insolvency of any members of the company. Therefore, here the company form of business undertaking enjoys so many benefits. What are the benefits enjoyed by the companies? Here, number one, the huge amount of capital required can easily be collected. See, as I told you, in case of sole proprietary and partnership form of business, huge amount of capital cannot be collected. But in case of company form of business, a huge amount of capital can easily be collected. Why? Because here maximum number of members required to form a company is unlimited. Therefore, the maximum amount of capital can be collected from the public. Therefore, this is one of the advantages enjoyed by the company form of business. And the next one is limited liability is the next advantage. In case if company is wound up, if company is going to close, in that case, the liability of the member is limited only to the extent of his investment. Of limited liability, here liability of the members is limited. Here you remember, in case of company, members are called as shareholders. Members are called as shareholders. Shareholders in the sense, the persons who have purchased the shares of a company are called as shareholders. Therefore, here shareholders' liability is limited only to the extent of their investment. Assume here Mr. A has purchased the shares worth rupees 10,000 and Mr. B has purchased the shares worth rupees 50,000 and Mr. C has purchased the shares worth rupees 5,000. In this case, the maximum amount which they can pay to the company is only to the extent of their investment, 10,000, 50,000, 5,000. Assume that Mr. A has paid so far rupees 6,000 and Mr. B has paid rupees 30,000 and C has paid rupees 3,000. Now, in case if the company is going to wind up due to heavy loss, in that case, the member's liability is not more than 10,000, 50,000, or 5,000. Mr. A's liability is rupees 10,000 only. He has paid rupees 4,000. Next, he is liable to pay rupees 4,000. Next one is B has already paid rupees 30,000 and 20,000 is to be paid by Mr. B. And C has paid rupees 3,000 and the remaining balance of rupees 2,000 is his liability. Means here the maximum liability doesn't exceed the amount of their investment. This is called as limited liability. I told you in case of a partnership form or sole proprietary form of business, liability is unlimited. Unlimited in the sense, in case of loss, if the business is closed, if the business assets are not sufficient to pay off the outside liabilities in full, in that case, personal properties are to be taken into consideration. Here, personal properties belonging to the sole proprietor or partners are to be sold out and that amount is used for paying off the liabilities of the business. But this is not the case with the company. In case of company, the liability of the members or the shareholders is limited only to the extent of their investment. If Mr. A has purchased shares worth rupees 10,000, means to the maximum he is liable only to rupees 10,000. If Mr. B has purchased shares worth rupees 50,000, means he is liable to pay only rupees 50,000, not more than that. It means the personal properties belonging to A, B, C or the shareholders are not taken into consideration. That is why here personal properties of the members is not going to be affected in case if there is a loss, if the company is going to close the business. This is called as the limited liability. Because of this what you call advantage, because of this merit, the majority of the people they take interest to invest the amount in such type of companies. Okay, try to understand here the important features of company. What are the important features? First thing is, company is an association of persons created by law. Here it comes into existence by following the rules and the regulations. It is not so easy to form the company. Therefore, here registration is compulsory. This is also one of the important features. Registration as per the Companies Act is compulsory. Next one is, here the required amount of capital is collected from the public by selling the shares. That aspect I am going to explain in my next videos. Here what is share capital, what are the different types of shares and how the company collects that amount. That part you are going to learn in the next what you call class. Okay, fine. Here important thing is the company collects the required amount of capital by selling the shares to the public. Since the public is investing the amount, since there is no limit for the membership, in case of a company, the huge capital can easily be collected. Therefore, this is also one of the important features of the company. Next one is, company is an artificial person, I told you. Therefore, it comes into existence by law. That is why it can also enter into agreement with third persons, or it can also enter into agreement with other parties. When it enters into an agreement or when it makes a contract, it gets the right to sue or to be sued. Therefore, here company can challenge in the court of law in its own name. And one more important thing is, here company can purchase the assets in its own name, and company can also take the loan in its own name. Perpetual succession means a long life. Therefore, irrespective of the death, the lunacy or insolvency of the member, the business continues, and therefore it is said that the company business continues for a long period of time. Okay, let us study in brief the different types of companies or kinds of companies. Number one, companies limited by shares. Companies limited by shares. Next one is companies limited by guarantee. companies limited by guarantee. Next one is unlimited companies. Unlimited companies. The basis of the liability of the members, company is classified into three types. Company is limited by shares, company is limited by guarantee, and unlimited companies. What is the meaning of companies limited by shares? Here the term limited, limited and unlimited. See, these are the terms used for the liability of the members. Liability of the members. Companies limited by shares means here the liability of the member is limited only to the extent of his investment. Assume here Mr. X purchases shares worth rupees 25,000. Shares rupees 25,000. His liability is limited only to the extent of rupees 25,000 only, not more than that. In case if the company is wound up, if company is closed due to heavy loss, in that case the personal property, his house, his land, his gold, silver, whatever it may be, his personal property is not going to be taken into consideration for discharging the liabilities of the company. That is why here Mr. X is liable only for rupees 25,000, not more than that. In case if he has fully paid the amount, rupees 25,000 has already been paid by Mr. X, in that case Mr. X is not responsible more than rupees 25,000. In case if due amount is there, suppose he has already paid rupees 20,000 and 5,000 balance amount is there. In that case, Mr. X's liability will be rupees 5,000, not more than that. This is called as limited by shares. The liability of the member is limited to the extent of the shares purchased by that shareholder. That is why here this type of companies are called as companies limited by shares. Next one is companies limited by guarantee. Sometimes what happens, the some of the shareholders, they guarantee the company. They undertake to pay a certain sum of money in case if the company is wound up. See, if the company is going to close, in that case, in that situation, they agree to pay a certain sum of money. They undertake to pay a certain sum of money to the company. That what you call amount is called as the guaranteed amount, which they need to pay only at the time of winding up of the company. This type of companies are called as companies limited by guarantee. It means here the members are going to give the guarantee. They are going to undertake to pay a certain sum of money only at the time of winding up of the company. This type of companies are called as companies limited by guarantee. Next one is unlimited companies. As the name itself indicates, unlimited in the sense the liability of the members is unlimited. Just like sole proprietary and partnership form of business, here the liability of this company is unlimited. Here this is the liability of the members. Unlimited liability in the sense, here if company's assets are less than the company's liabilities, in order to discharge the liabilities, outside liabilities in full, if the shortage amount is there, that amount they can recover from the members' personal properties. Here in this case what happens, the members of the companies are going to lose even their personal properties in case if the company's assets are not sufficient to discharge the outside liabilities in full. Okay, on the basis of number of members, the company may be classified into two types: public company and private company. Public company means a company which is formed with minimum 7 members and maximum number of members is unlimited. Next one is, here in case of public company, transferability of the shares is not restricted. Here the members or the shareholders can transfer their shares to others. Next one is private company means, here it is a company which is formed with the minimum number of members. Here private company, in order to form a private company, minimum number of members required is 2 and maximum is fixed, that is 200 as per the Companies Act of 2013. Next one is, here private company can't transfer, it restricts the transferability of the shares.